What is a reverse mortgage and how does it work? Hi, I'm Ron Kamler. If you've ever heard the term reverse mortgage and thought that that sounds confusing, that sounds risky, or that's probably not for me, you're not alone. Most people don't really understand what a reverse mortgage is, and honestly, it's not their fault. It's rarely explained in simple, everyday language. In this video, I'm going to walk you through what a reverse mortgage is, how it works, who it's designed for, clearly, calmly, and without any pressure. This channel is for homeowners aged 55 or older, their families, and anyone who wants straightforward, honest information about reverse mortgages. My goal here is education first, so you can decide if this is something worth exploring or something to rule out entirely. Before we go any further, I want to share a little context with you. My name is Ron Kamler again. I've been the president and CEO of Alliance Reverse Mortgage since 2001. Reverse mortgages aren't one of my many loan products we offer. Since 2007, they're the only type of loan we do. For almost 2 decades, we've partnered exclusively with credit unions to serve their members. That means our focus has always been on education, transparency, and long-term outcomes, not quick transactions. I share this simply so you understand the perspective behind this channel. One quick note before we continue, this video is for educational purposes only. It's not financial or legal advice. Everyone's situation is different, and decisions like this should always be made with proper guidance. So what is a reverse mortgage? In simple terms, a reverse mortgage allows eligible homeowners, typically 55 or older, to turn a portion of their home's equity into money while continuing to live in the home without making a required monthly mortgage payment. You still own your home, your name stays on the title, and you're responsible for property taxes, homeowners insurance, and homeowners association dues if you have one. Maintaining the home is also important, just like any other homeowner. The difference is this. Instead of you making monthly required mortgage payments to the lender, your loan balance on the reverse mortgage grows over time and is repaid later, usually when you permanently depart the home. Why do reverse mortgages exist? Reverse mortgages were created so people could spend their houses. I know that sounds weird, but follow me. They're created because many retirees are house rich and cash poor. They may own their home or be close to paying it off, but they're living on a fixed income while costs continue to rise. A reverse mortgage is simply one financial tool designed to help bridge that gap. Not just for today, but for the future as well. For some people, it's about setting up a peace of mind, knowing there's money available if healthcare needs change or unexpected expenses come up. For others, it's about having a little more flexibility, whether that means taking a long-planned trip, updating a kitchen, bathroom, or helping a family member in a meaningful way. It's about using the value in the home to support your life the way you want to live on your terms. And it's important to say it's not right for everyone. A reverse mortgage is not the perfect tool for everyone. How can you receive your money on a reverse mortgage? Depending on the situation, the money from a reverse mortgage can be taken in different ways. Some people choose monthly payments, others set up a line of credit for future needs. Some people take a lump sum at loan closing, and many use a combination of all of that's available. There is no one-size-fits-all approach. The structure should match the person, not the other way around. How can you use the money? Depending on the situation, people use reverse mortgages to eliminate an existing mortgage payment. That's usually the most popular. To create some monthly cash flow, to set up a line of credit for future needs, to pay for in-home care, to buy a new home without taking on a new mortgage payment. We call that right-sizing. Or simply to create peace of mind for what might lay ahead in the future. There's no single right reason. It's about fitting the tool to the person, not the other way around. How's the loan repaid? One of the most common misconceptions is that the bank takes the home. That is not how it works. A reverse mortgage is typically repaid when the homeowner sells the home, moves out permanently, or passes away. At that point, the home is usually sold, the remaining loan balance is paid off, and any remaining equity belongs to the homeowner or their heirs. Reverse mortgages are also non-recourse loans, which means the loan can never exceed the value of the home. In future videos, we'll break this down piece by piece, including costs, common myths, who this isn't right for, and how families should think about reverse mortgages together. In the next video, we'll start an important one: who a reverse mortgage is not right for. If you found this helpful, consider subscribing so you don't miss future videos. And if you're just starting to learn about reverse mortgages, you're in the right place. And feel free to reach out. We'll help you however we can without any pressure. Thanks for spending a few minutes with me today.